Good morning, everyone. Hi, my name is Janesh Patel. I am the partner at Integra here in Singapore. It gives me great pleasure to welcome everyone to the opening session of the SC Fintech conference on this related to the rise of embedded finance and headless commerce. Before I introduce my panelists, I wanted to remind everyone that you can interact with us using Slido for this session. To participate, all you would need to do is select the rise of embedded finance perspectives and challenges on the drop-down menu on the right side of your screen. You can then ask questions, vote for other questions, share ideas, and even interact with the polls. I look forward to posing some of those questions and thoughts on Slido later on in the session, but let's now kick off. I'll get everyone on the panel to quickly introduce themselves so you have some context as to what they do and how this is related to the topic in conversation. So maybe with Enmaha, you can start with your background.
Good morning, everyone. Pleased to be here. My name is Mohammed Mustaqim Mohammed. I'm currently heading the Business Innovation Unit in Telecom Malaysia. We're tasked with creating alternative revenue streams for Telecom Malaysia, and Fintech in financial services is too big an opportunity for a telecommunications company such as us to pass up. We've just launched our pre-approved loan program with our partner, P2P lending partner, funding societies, which we use telco data to build risk parameters and also run eligibility evaluation to enable our SME customers. We've got approximately 400,000 customers, to enable them to utilize funds immediately. It's a two-step, two-day verification to disbursement process that will help our SMEs ease the cash flow burdens that they have, or even act upon opportunities that arise immediately.
Fantastic, thank you, Enmaha. Scott?
Morning, everyone. I'm Scott Bales, a Global Digital Advisor at Microsoft. So I work in a specialty client advisory function where we help customers and partners sort of navigate the trends, the technologies that are shaping industries over the sort of, coming 3, 5, 8 years out.
Fantastic, and Cindy?
Hi, morning everyone. It's a pleasure to be here. So my name is Cindy and I'm an industry manager within the financial services vertical with the Google Ads business in Malaysia. So we partner with the top advertisers in finance, advising on strategies related to advertising, media, as well as technology. We primarily partner with our businesses and our clients to essentially help them meet their customers in this digital age as quickly and as instantly as possible. And in terms of my background, I spent about 8 years in consulting and private equity operations, and I've been with Google for the last 2 years.
Fantastic. So let's kick off. Maybe we can start at a very high level. I mean, there's a lot of buzz around embedded finance and headless commerce. But maybe let's try and think about what the applicability is and how your respective organizations are looking at embedded finance, both for your customers as well as from an infrastructure perspective within your organizations. So maybe, Enmaha, I think you gave us a very small example of how you're thinking about it, but more structurally, does this, from a telco perspective, become a new business vertical and something that you're dedicating more resources to? And how do you then leverage that from an embedded finance standpoint?
Oh, definitely, because I think as we are all aware, that adding financial capabilities, be it payment, investments, insurance, or even credit, will increase the overall attractiveness of goods and services to the end consumer. It provides better customer experience, increases lifetime value of the consumer, and there's numerous literature and also use cases on that. We believe that it is a vertical worth looking into, and that's why Telecom Malaysia, as a telecommunications provider, is looking at this quite seriously, because we believe that all going concerns and companies will be able to participate in the very near future in distributing not only bundled services or white labeling of financial services, but even to the extent of creating specialized experiences for their end users. In terms of the infrastructure, I think it's a long drawn process. We're at the very beginning of fintech, especially in Malaysia, not only on the global scene, because I think the definition in itself, whether it's embedded finance or the broader perspective of fintech, we're only touching the tip of the iceberg. And there's still a lot of opportunities to be built in terms of not only the supply landscape, which is the infrastructure, but also in delving into the specific subsegments that are requiring financial assistance, and also trying to get into financial inclusion.
And Scott, I mean, going on to infrastructure itself, or just broadly around the consumer perspective or the SME or client perspective, how is Microsoft looking at this? And is it on a case-by-case basis, or is it on building out a platform capability?
Yes, so we're taking a very strong, I suppose, lean into what we're calling sort of an ecosystem approach. Because if I look at embedded finance, it's not so much just about the finance itself in isolation. It's actually realizing that finance fits into a series of activities within an ecosystem. So whether it's supply chain, whether it's trade finance, whether it's buy now, pay later in consumer goods, it all operates within a larger ecosystem. And so globally, we're seeing a convergence of like open economies, through APIs, through cloud, through various technologies, where things are just now naturally plugging together. And so some of the objective insights we have around whether it's products, business activity, economic conditions, even geopolitical risk, can be calculated in real time in a moment for us to make decisions around, can this person afford this at this particular time, or this mom and pop shop afford this particular time? And we can go well beyond the traditional kind of credit scoring or payment functions of what the incumbent financial services providers have done, and say, okay, as Mo just mentioned, like we can start looking at other data. What does the other economic data or social data suggest around the affordability of finance in this particular moment? And to the point where we can actually almost make that as an automated decision. So Microsoft is seeing that. We're seeing convergences of industries. The big ones we're seeing particularly obviously is buy now, pay later is a massive trend. And then on the SME side is a lot more proliferation around what we're calling supply chain finance, particularly for last mile informal retailers. So think like, last mile consumer retailers in Indonesia, Malaysia, Philippines, where they are traditionally beyond the accessibility frameworks of banks. And so we're seeing a lot of non-traditional players actually extend services so that they can essentially access either embedded finance, business activity support, growth support, supply chain finance, invoicing finance as well within their ecosystems.
And from Google's perspective, Cindy, I mean, ecosystem is a big word that tends to be used by Google a lot, but you're both a product manufacturer on the payment side and integrated on that piece, as well as an ecosystem provider between incumbents and startups. How does Google position themselves in this space?
Yeah, I mean, I think when you speak about Google, you realize the scope of the businesses in which it's involved. But I think the real core value proposition in terms of where Google plays with embedded finance is centered on the Google Cloud proposition, the platform ecosystem, essentially. And it's viewed towards creating an open banking platform. Because embedded finance, if you think about its essence, it's really about consumers, whether that's retail consumers or business consumers, consuming financial services outside of a traditional banking environment. And essentially, how that happens is usually financial services institutions are embedding their products and services within the third-party digital or offline experiences. I think Scott kind of referenced it about how it's kind of created and enabled through this network of APIs. And essentially APIs are at that foundation of that modern connected application. And so with Google Cloud's suite of off-the-shelf connectors, that essentially helps a lot of traditional banks become a lot more flexible in terms of working with third-party partners. And so within this suite, it essentially drives three main things, which is the first one is it enhances the data interoperability between traditional banking data within the API ecosystem. The second one is about essentially helping it go to market a lot faster by having a well-connected, integrated suite of APIs. They're able to partner with a lot of third parties and bring these products to market a lot quicker so that consumers can realize benefits much faster. And the third one is that, if startups are able to work with, if banks essentially have a very well-connected suite of APIs, they themselves become attractive partners to the ecosystem So I think that just creates a very healthy back and forth and collaboration between banks, financial services institutions, and startups and fintechs as well. I guess another key point in terms of the Google Cloud view of what embedded finance and open banking is that it's also a multi-cloud strategy. So it integrates well with, Amazon's AWS as well as Microsoft's Azure, so that, just because someone may not be within the same ecosystem, it doesn't mean that it's not possible to continue to collaborate and create more opportunities for embedded finance.
So let's talk a little bit about friction. I mean, the whole thesis behind embedded finance is to remove the frictions between the various stakeholders in the ecosystem, whether it's on the product manufacturing side, on the distribution side, on even just the standardization of APIs to ensure that all parties are aligned. Can we talk a little bit about how you look at the friction points that embedded finance is trying to resolve, or even in the case of headless commerce, how for the end consumer, the aspects that you're tackling within your respective businesses is addressing that? So maybe start with Scott in this instance. If I think about standardized APIs, for example, which is a pretty big driver of value and certainly has been the driver for companies like Plaid in the US and Tink in Europe, what do you think are the key friction points that you guys are trying to tackle?
Yeah, and so I think that the intersection of data or even business activity is probably the largest challenge we have, and that is historically financial services, whether it's payments or finance, has operated in an almost like a closed ecosystem. And so when they make a decision around the inclusion or deployment of those products, it is only done within the ring-fenced ecosystem which they operate. And so we see actually yes, there is room for traditional credit scoring, risk scoring, and so forth. But actually those opinions and decisions are extremely more enriched when we speak about things like what Moa was saying, is like, we can look at things like economic supply and demand forecasting. So for instance, if you are a small F&B retailer in Cambodia, in the weeks prior to their major peaks in product, for instance, might be, so in Cambodia, I know the water festival sees a huge spike in F&B sales. But the bottleneck there actually is that the ability of the manufacturers, the distributors, the whole supply chain, and even the consumer to benefit from that period of time is constrained by the working capital of the mum and pop shop that actually sells that product on the street. Because if they don't have the money at the time of ordering prior to a peak season, they don't have the product for that peak season. And so if we can converge, say, economic supply and demand data with traditional things around, let's say, supply chain finance or even consumer trends, we can actually make a very practical call that we know that mum and pop shop can sell 10 times the volume of last month during this festival. So we'll happily, basically liberate some of our financial products to enable that as an opportunity. And that also happens on a consumer standpoint as well. And so I think the key here is actually seeing the convergence of traditional financial services data with almost economic and ecosystem data as well to come together.
And taking that one step further, in your case, Emahad, does this look like a new business vertical for you with the advent of digital banks as well? And kind of how are telcos positioning themselves to take advantage of this? Because the frictions are there and have always been there, right? Within your existing businesses, as well as within financial services in general. Some more acute, say in traditional banking, some less so acute in insurance. But nevertheless, the value proposition of that competition to incumbents is valuable for all parties, including fintech. So where are the friction points that you guys are tackling, given your access to the end customer, access to the data, an understanding of the needs of the clients in your network? How do you think that this is going to play out from a business perspective?
I think that there are two parts to this. The first one is definitely Telecom Malaysia will be looking at exploring this vertical seriously in order for us to differentiate between players within our industry, within the telecommunications industry. But I think more importantly, we're trying to also solve the pain points that we've been hearing from our customer base. First and foremost, they're basically saying that onboarding onto the e-commerce business is very technical, it's very, very difficult, and they're not well informed of practical steps. They're aware of the technology that's around, but how do they onboard themselves? And that's where I see our relationship with for example, 2.5 million households, consumer households, and 400,000 SMEs come into play. Educating our customer base sounds very paternalistic. I think assisting is a better word, in order for us to ensure that they get on board and do not miss the boat in this wave, which is, I think, is going to be a very, very small window of opportunity for serious players to get on board. But it will be a long tail play for the consumer and end user market. I think the friction points that I've mentioned, and also Scott has actually just covered very, very quickly, is the ability to scale their business, not in terms of only reach, but also in terms of creating additional value for our customers, right? Because from what we found in our recent launch and the groundwork that we've done, together with the SME Association of Malaysia, for example, only 26% of SMEs are choosing digitalization and e-commerce as a strategy post-pandemic. And predominantly, most of them are saying, I will restructure, or it's business as usual. 50% of them find funding as a hindrance, and 60% of them are saying that they're unaware of funding options. So there's a dearth of offers, information, technology that's on the supply side, but on the demand side, on the end user side, I think that the ability for us to communicate the benefits over to our customers is still a real challenge. And these are stats as late as or early as 2021, beginning of this year. But I think the need is there. The want from the demand side for the consumers and the SME is there. When they voice out to say that only approximately 13% of SMEs think that the current system and their current financial providers are helping them in achieving their financial goals. Now that's quite worrying, especially in light of a lot of initiatives that's been on foot, not only by the regulators, by corporate bodies, and also the banking sector by themselves. But the perception is, and we're not going into the debate as to whether the banks are doing a good job or otherwise, but from our analysis of our own or engagement with our own customer base, only 13% of them are quite confident that their financial system currently that they are in is helping them in achieving their financial goals.
That actually brings me up to another more important point, which is around the education and the awareness within the ecosystem. I mean, Cindy, I think this is something that Google and actually Amazon and many others in the cloud ecosystem do quite well, particularly on the fintech and startup ecosystem side, in terms of getting them up the curve in terms of the key infrastructure needs and requirements, but also then being able to help them engage with incumbents, product manufacturers, and on the supply side of the financial services game. How's Google positioning themselves on driving that? Because it really will need a lot of intermediaries to drive awareness and education. And so is this an area of focus, or is this something that you just naturally leave to the ecosystem to manage?
Yeah, I think I'll answer that in two parts. So the first part is kind of the domain in which I work in within the Google engine. So I work in the Google Ads business. So I primarily work with, large advertisers in terms of their customer engagement work. And when it comes to finance, I think, even larger than embedded finance, I think in Malaysia, financial literacy is quite low. There was a survey run by the Credit Counseling and Debt Management Agency, the Malaysia agency, which is AKPK. And in it found that 1 in 3 Malaysians actually self-identified as having a low level of confidence when it comes to financial management. And that's, can be worrying, because if you think about embedded finance, it means positioning more and more financial products in even more customer touch points, right? And I think for customers, you don't want to create environments in which only those in the know are extracting value, and a large majority of our population is missing out on being able to understand the benefits and utilize the benefits of embedded finance out of intimidation. And so I think it kind of brings up a very critical point in which I think another data point that's really quite interesting is since the start of COVID and the pandemic last year in March, within Google search in Malaysia, we actually saw finance searches grow by about 50%, which is massive considering finance is one of the top categories of search in Malaysia. And another one, which is within investment, it actually grew 5 times since the start of Malaysia. I think it's quite hard to quantify how massive these gains in terms of the need for information is. So that need for information from customers, it's not just about acquiring customers, right? It is a customer need that is explicitly being expressed and that we identify through the Google search signal. So it just really places FSIs, fintechs in a great position to be able to be that trusted source of information in terms of providing credible credible advice with regards to how they can manage their finances. So like one of the embedded finance mechanisms, which I find really interesting, are these roundup investment mechanisms where, when you make a purchase with a third party retailer or, maybe with a travel agent or something, you're able to round up the spare change from those purchases from linked accounts, credit cards, or debit cards, which then automatically go into an investment account. For consumers, that's really great because essentially it's a low in the background and it helps them save for things like lifestyle aspirations like owning a house or saving for retirement. So these are not necessarily the most straightforward concepts, but they bring huge impact to consumers' lives. So I think that role of education for the leaders within this space is going to put them in a great position to both support their customers and as well as benefit from that as well. In terms of the second point about where Google plays, I think we understand that we have so many different teams and customer touch points that it does naturally become a part of our fabric when we deal with when we work with our customers. So we often work a lot in terms of collaboration. So for example, within the marketing side, while I do work with our customers in terms of looking at their marketing maturity, we also do identify technology improvements that are part of that journey. And so we do partner across our business to be able to bring sort of a whole Google team to be able to partner with our clients to help them go down this journey as well.
Fantastic. So look, I mean, now we're going to get into a little bit of a more controversial area, which is around regulation. I would say that Enmaha would probably know from
you just had to,
Jinesh. from a telco perspective. I think unbundling of the local loop in the late 90s proliferated the adoption of mobile in a significant way globally. And I think that regulation in other parts of the world has been a driving force to greater access to data and ownership of data by the end consumer, the end SME. Particularly with PSD2 in Europe, which was mandated almost a year and a half ago and has created a huge amount of operators in the ecosystem that are driving value. Same with ACH and fast retail payments or real-time payments in the US. Do you feel that regulation is in sync with where embedded finance as a theme is going? And if not, what are the things that you would like to see the regulators work with and with regards to trying to drive this process? So maybe we'll start off, because of the telco analogy, we'll start off with you, Enmaha.
I'm going to shoot myself in the foot with this, but I think it's a tricky issue for regulators, not only in the financial sector, but also in the telecommunications sector and generally just across the board, to be in step with technological advancements, especially during the last decade or so, in which it has just leapfrogged, leaps and bounds. And it will always be a cautious move by the regulators, because we will have to consider the socio-economic impact and also the risk factors, of which some innovators would not overlook, but discount it in terms of a business risk. But the bigger socio-economic impact, like for example, data sanctity and so on will definitely be at the top of mind for regulators. And I think the Malaysian scene is ready as far as regulators are concerned. Stakeholders are supportive, the talent is available and also in the right places. And regulators to a large extent are nurturing in their approach for embedded finance and fintech in general. We have CMP3, for example, which has just been announced. We've got Bank Negara's position on data sharing. We've got government incentives for going digital and so on. I think it's not for the lack of the attention by the regulators. It is rather the lack of collaboration between the regulators, the industry, and more importantly, the end user. We try to create or innovate within a specific bubble, thinking that this would be good for the consumer, this would be good for the SMEs. What the telcos are very familiar with is that the needs of the end consumer needs to be put at the forefront first. And work backwards towards what needs to be regulated, how that will not then impact on the progress of certain technologies. And definitely and I think as far as from the telco's perspective is that in the event that you or the financial sector does not agree on a broad collaborative stance, there will definitely be other players which will come into the market and will be taking the share of wallet away from the incumbents. But working together will ensure that value is maintained and in turn will be the platform for creating new value opportunities.
Maybe for both Cindy and for Scott, regulatory affairs becomes a big component of both of your respective businesses globally. So how do you think about this? Because the rules and regulations are very different around the financial architecture and the provisioning of infrastructure within the space globally. So how does Microsoft and Google kind of position themselves in this?
Do you want to go first, Cindy?
Why don't you go ahead?
I mean,
Scott's playing it safe now.
Yeah, no. I'll express some of my personal points of view. So I'm actually a former banker, multiple-time co-founder in fintechs, and been doing advisory in the space prior to joining Microsoft. So this is something that's very personal to me, and so I bring it back to the kind of fixed versus growth mindset in terms of how this shapes the potential in this space. Is and I'm not pointing names and not blaming here. I'm just saying the traditional approach of the incumbents is a defend or a fixed mindset approach to how we enable progress. And that's always been the place. They have a larger fear of losing their position than actually capitalizing on the opportunity that actually lays in front of us. And as a result, it's left the door wide open for all of these fintechs and tech companies to take, key positions within the lives of consumers. Like if I think about right now in Southeast Asia, if you look at the role that Lazada, Grab, Gojek have in the daily life of an end consumer, I can tell you right now, even without the financial data of a bank, they have way more accurate credit scoring than the banks have today. Just because they've put themselves in that enablement place. I think the key from a regulatory standpoint is we still have a long way to go on data ownership, particularly the liberalization of data ownership. While we have things around open banking and blah, 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 the reality is whether you're an SME or a consumer, your ability to consolidate that data and make that useful and meaningful for you as an individual or a business is still very much hamstrung. And so I'm personally a huge advocate for how do we liberalize the power of data. I mean, I'm pretty sure everyone on this call will agree that if you put data into the hands of somebody to make objective, smart decisions, they're going to make better financial decisions. They're going to make better purchasing decisions. They're going to make better savings decisions, retirement decisions. The challenge today is, to make those decisions, they need to consolidate their data. They need to drive the insights. They need to decide what can I afford? What's my net worth? How do I save for my kids' college? Those simple everyday questions. And right now they are fragmented and isolated. And so I'm a big advocate of around how do we ensure that not only regulation, but the broader ecosystem realizes the growth potential here to actually play a positive role in society. And so in particular, I think one of the things I personally push for is, I think from a regulatory standpoint, it's no longer a single industry role. If I look at, for instance, the financial regulators in the region, particularly the emergence of the digital banking license frameworks, we're going to have a whole bunch of non-banks come into that discussion and share their experience, their knowledge, their insights on market trends, which to me is only a positive thing from in terms of advancing particularly financial regulation. The second challenge here, and this is a regional challenge, is realizing we still have massive challenges on inclusion. As Moa had mentioned before, is less than 13% of Indonesians even have access to financial services in a formal sense. And so we still, and I still see this every single day, is we have informal mechanisms. And I'll give you the most perfect example. In most markets here in the region, the amount of formal identity that's been used for the KYC process to open a prepaid SIM is actually quite low. And it's by no fault of the telco, it's actually the infrastructure and the ecosystem to include everyone has flaws everywhere. And so I think particularly if we look at it almost like a way to close the identity and interoperability gap for the whole ecosystem, that opens the doors for many of the challenges we face today at an inclusion standpoint. Like if you can fix identity for the informal SME in the rural parts of Malaysia, Indonesia, Philippines, and Vietnam, like that's a huge problem that still needs to be addressed. And it's until we can address that, we can't even start thinking about the role of embedded finance or buy now, pay later, or those, because I mean, the reality is today, escrow-based cash on delivery is still one of the largest forms of e-commerce in the region, because those individuals don't have access to a financial product to give instant payment. And so they go to their local convenience store to buy a prepaid cash escrow so that the e-commerce provider can actually release that product for delivery. And so we're now trying to risk mitigate. Like that shouldn't exist in 2021. Like this has been financial inclusion has been a goal for the various foundations for nearly 20 years. And to know that a cash-based escrow still exists, like it's kind of like, why?
Yeah, fair enough.
No, I think just to add on that, Scott, I think it's a brilliant point, because I think the ecosystems which are being built, from the perspective of the builder itself, I am building an ecosystem. But in terms of the needs of the end consumer, especially the SME, it's a microcosm. It's still a fragmented journey, a fragmented data piece, a fragmented identification, fragmented even connectivity to a large extent. When you actually have the focus of financial inclusion or creating socio-economic impact, easier said than done, but these barriers need to be relooked at. I'm not saying it will break down overnight, but it's my data, my customer, that doesn't really resonate anymore within a digital environment. And I always re-emphasize this to my team. When you say, you have 400,000 SME customers, I said they're also customers of Nestle. They're also customers of other organizations. And equally, those people who actually have the parties who have actually access to those customers will always also think that they have an ecosystem to be built. When in fact, we as consumers are living within a larger definition of ecosystem, of which the needs and requirements are not fully met by a microcosm of services or even infrastructure.
Yeah, and so I think the key stat for what I was talking about is that, so if you go back to the original portfolios of the poor, which is almost 25 years old now, okay, these informal or less inclusive sectors have 4 to 7 times more financial products in their life than most developed markets. And it's not because of anything else other than their financial life is very different. So they run high velocity cash flow in a household. They'll have a lot of informal things like lending, loan clubs, loan sharks, microfinance, cash under the mattress. Like if you read like the informal instruments they have in their life today, is way more complex than what we have access to in a developed market.
Yeah, but I think you raise a point around identity as being very critical. And I'd say that one country in the region that has really pioneered this from a top-down perspective is India, with the India Stack and their biometric system. I think identity is super critical to inclusion. And it's surprising that the rest of the region lags in this context. But it's also been, I'd say, the bedrock of Google Pay's global kind of ambitions going into the whole payment space directly and the next billion user kind of concept. I mean, in that case, Cindy, do you feel that the key areas that Google can drive value around is around identity and to see if there is a way of a shared utility or infrastructure that qualifies identity in this very specific way?
So for Google Pay, it's actually led by the Google Pay team, and I'd rather not speak out of turn in terms of what their point of view is. But I mean, the whole point about identity also does touch on one of our key products, which is Google Search and Gmail and YouTube and all of that. That, you know, if you think about the global reach of Google, it's about 7 billion users, which is massive. And one of the big topics within that space is actually privacy of individuals and the management of that data. And so, you know, while we talk about embedded finance and creating that openness of data, I think we're also extremely careful in terms of ensuring that when we do talk about who has access to what and who is, you know, shown access to what kind of products and is accessible to our different, to our side of the customers, I think it's very important that we are compliant with and working together with a lot of regulators with regards to like identity and privacy within the World Wide Web, right? And so, you know, there is also the deprecation of cookies on browsers coming up soon. And so we have a lot of privacy sandboxes in which we are testing and innovating a lot of ways in which we can still ensure that people are given the most relevant content without revealing like individual identity, because we also don't want to get into a position where, you know, individuals are able to be targeted specifically for products that may not necessarily be in their benefit. So I think that's one of the key elements in terms of where Google is sort of leading a charge in terms of ensuring privacy of individuals when using our products.
Fantastic. So look, we've spent about half an hour discussing a lot of the things that I wanted to cover. Maybe let's go to some of the Q&A that's now coming through Slido. And I'll pick a few of the things because some are specific to individual panelists and some are more generic. But the one that seems to come up quite consistently is the interest around buy now, pay later and its embedded value. My key question on buy now, pay later is it more of a feature than an actual driver of value? And just because there is a bit of a zeitgeist around buy now, pay later today, does that necessarily mean that it's a good thing? So maybe, Scott, because you mentioned this in the context of some of the opportunities you're looking at from an infrastructure perspective, you know, what are your thoughts on buy now, pay later? And is this one of the kind of core features of embedded finance?
So I'll try and break it up into the two components, because buy now, pay later for a consumer and buy now, pay later for a business is a slightly different context. So because I look at buy now, pay later on an SME standpoint, almost like invoice financing and supply chain financing. It's almost like saying, how do we build in financial terms that allow the business to actually make revenue before they have to pay their costs? So let's park that one. But from a consumer side, remember this is, yes, it's a convenience thing for the consumer, but let's be honest, this is a product manufacturer's CFO determining that if I can amortize my receivables over a period of time, I can actually increase my revenue potential for a particular product or service. That's what it comes down to. And so the economics in terms of saying, I believe I can get a 20% lift in revenue if I collect my revenue over 90 days. That's what a CFO is deciding. So that, from a business standpoint, is there is people that are far more educated and smarter than I to make the appropriate calls from a CFO component. But from a consumer, it breaks us down into the kind of like logical steps. So for instance, most people already do behaviorally buy now, pay later. They don't necessarily have a product, they do it behaviorally. And so buy now, pay later actually comes out of it's the previous lay-by, it's the savings things we used to do. And even to the point, like particularly in this part of the world, it is very common to use a loan shark as forced savings for a particular goal. So all those things already existed. Buy now, pay later is just formalizing it with the actual end merchant. And so if I look at the Afterpay acquisition in Australia, or Grab's push into buy now, pay later, it's going to be a part of life. I think the hard part in this is, how do we ensure that the advisory component around that product is appropriate and also, I suppose, moral to that end consumer? Because what we don't want to do is what we got through the subprime crisis, is we start telling people to take up credit that they can't afford. That's an absolute big no-no. But I understand from around how do I help them spread payments across a period of time, because that has existed for decades. And so I think it's going to be a huge part of retail globally in the next 5 years, because it basically helps both parties. One, it helps revenue uplift, but from the consumer, it's around how do I spread my expenses over a period of time.
Cindy, thoughts? I mean, one of the questions that's also come up is what is Google planning to do in terms of offering digital financial solutions themselves as well? I mean, this ties into kind of product versus infra versus kind of intent. Are there aspects to which, you would become more of a product manufacturer as a player in the ecosystem?
I think I have to repeat myself again and say, like, I am within the Google Ads team and unfortunately cannot comment on what Google Pay strategies are. But to the earlier question around buy now, pay later, right? I think, there are, I remember 10 years ago, even on a personal basis in Malaysia, these things have existed. I think I had to furnish an apartment with IKEA, and it was quite a large bill at the point in time. And at the time, Maybank actually offered, to be able to amortize that payment across 12 months. And, it was a huge benefit for me, because otherwise I probably would have had to live without a couch for about a few months, without a bed for a few months, and so on. So it really is about managing that cash flow. And I think for a lot of consumers, having more and more places that offer that is going to be very helpful. And I look forward to that proliferation of buy now, pay later.
I think just to add on to that, for the buy now, pay later, sorry, Jinesh, it's if it's okay for a bank to offer 0% installment, but it's not okay for a non-bank to offer breaking up payments over a period of time, like Scott basically said, the dynamics and the calculation and the risk factors are probably to the same quality as those from financial institutions, then why not? Then definitely, if that's the way that it should be, it provides the customer it's a psychological effect on the consumer, right? So that will definitely drive up, like Cindy said just now, if the couch is 1,000 ringgit, for example, you don't have 1,000 ringgit, but you will be able to claw up 1,000 ringgit over 12 months and so on. The psychology of the purchase during that time of purchase, or the point of service, then changes dramatically. And that in itself is probably what the regulators have pointed out as the end objective, to stimulate socioeconomic or to move the socioeconomic needle. It then comes down to risk factors. And like Scott rightfully said, if it's already done by a CFO of a product manufacturer, thinking that I will be able to claw more value if I spread the collection over a duration of time, then why not?
Yeah, I mean, this brings on to one of the other questions that was also raised by one of the questions on Slido, which is around how critical embedded finance is going to be in the SME and micro SME space. The question actually was, is it going to be a game changer? For us as investors, we believe that the SME or micro SME space is probably the biggest gap of opportunity for both traditional fintechs and large tech companies, but as well as newer players, including incumbents, to tackle. So if I was to take away the consumer hat for a perspective, because I think we've talked a lot about the consumer perspective there, in the SME space, what are the areas that you think embedded finance are really going to drive value for? And maybe you can start with the example. I think earlier on in the conversation, Maha, you mentioned your partnership with a peer-to-peer lender targeting the SME space, but also maybe Scott, talk to your experience in that segment as well.
Yeah, so I think we started not in the consumer market, but in the SME market for two reasons. When Telecom Malaysia looks into an initiative, it looks in terms of not only value creation, but also the socio-economic impact to the nation. Being a GLC, it's a responsibility that we cannot shirk. And having said so, we firmly believe that participation from micro SMEs and SMEs is central for any technology adoption in order for us to achieve critical mass. And one of the reasons that has been stated by a large portion of our customers is that we want to do this, but we don't know how to, or we can't afford to do so. So the other perspective is that I know it sounds very utilitarian, but there are certain infrastructures and portions of the overall infrastructure ecosystem that needs to be given away as opposed to being charged. ID, for example, is not something that the SMEs are willing to pay an additional line expense for. Just like how we have our identification cards. Yes, we have processing fees and so on, but if you're charging it as a service just to create an identity, it's not high on the priority list of what I need to spend for my business within the monthly cycle or yearly cycle. So there are certain parts of which needs to be given away, and value needs to be ventured into areas of which they are really value creating for the end consumer. I'm being a bit convoluted. So if the SMEs, for example, are creating value from the usage of the service that you're providing, then try not to charge for the service that is fundamental, but try to work with a different business model of which you can actually share the outcome, which is success-based, for example, right? Share that outcome. And that in itself will even change the psychology of the SME. And I think there's another important point to make. When you're dealing with micro SMEs and SMEs, we have the tendency of bucketing them into this is not consumer and this is the SMEs. So for example, Moha as a consumer is also Moha, the owner of ABC Sdn Bhd. So if the identification is tagged to me and my financial performance or my financial health or credit worthiness, that is a basis for that evaluation or risk parameters that we can actually already build. Eventually, when Moha progresses along the way in its business, then you add on a few more data points, a larger parameter in order for you to actually see that. Because we keep treating SMEs as like foreign entities. They are actually people behind them. So, when you're saying, for example, you've got business registration numbers, BRNs, right? If you don't have a BRN, you're not a business. So these are fundamental questions that need to be looked at. And it's not within only the financial sector, like Scott rightfully has already pointed out. It needs to be a collaboration by several players across industries in order for us to solve this conundrum.
So, I mean, so a couple of key statistics which came out of the World Bank report, I think last year in this space, is that SMEs globally in many emerging markets account for up to 70% of employment and 60% of productivity. Yet less than 30% of them actually have any kind of formal identity for the business, as Moha was referring to. So essentially, the family finances and the business finances are together. There is no means of separation. So if there is a funeral or a wedding in that family, the amount of disposable cash to buy supplies goes down as well. And so this becomes a continual challenge within the ecosystem. I mean, if I go back to, I just want to go back to a sort of more exoteric. So Microsoft's mission is obviously to empower every person and organization to achieve more. And so this has been a kind of a tenet that I've taken into my work. And so I've done a lot of work in this space for SMEs in Sub-Saharan Africa, Southeast Asia, and also now touching Latin America. And not only is identity a challenge and financial inclusion a challenge and so forth, there's actually, their lives are basically hampered by a thing we call the poverty premium. And that is services that you and I take for granted on an everyday basis that either may be free or at scale decreased cost, they pay massive premiums for. Like I'm talking, there is still a large percentage of SMEs that have to put cash in an envelope and pay 15 to 25% for just paying their supply bills. Like that's I buy from Coca-Cola or Unilever and I pay 25% to pay my bill, which is ridiculous when most of us pay that for free in real time. So these are some of the key ecosystem challenges that we need to actually look at. From the adoption standpoint, as Mo has said, is like, these are businesses that they are rich in time, but poor in cash, okay? Cash is essentially their most valuable asset, and they will give up time well before they give up money. And so a huge challenge to digitization or product digitization is essentially around having affordable solutions that create enough value for them to justify an expense. And so actually one of the things that we've been looking at is realizing is, so let's look at, in many of these cases, we look at what's called an ARPU dependency. What is the average revenue you need per end user to justify a business case? Is actually realizing that purely selling a product alone, the ARPU needs are way too high for the market. So let's say, for instance, if we're looking at a mum and pop shop in Borneo, paying $10, the equivalent of $10 a month for some kind of SaaS offering to manage their sales, purchasing, and inventory management, they're just not going to pay that, never. But we actually have to realize that if they sit within a broader ecosystem, that ecosystem itself has insights that other players actually value quite highly. And let's look at like the large FMCGs, CPGs, F&B companies that go, look, if I can leverage that data around demand forecasting, economic resilience, supply and logistics planning, you know what, I can actually subsidize this and actually drive a larger level of inclusion to the point where we may not have to charge the end user anything. And so the end user ARPU dependency goes from $10 to $0 as long as we can get at scale. The challenge in this is the default position of competitive behavior is, I want to win. And I don't think this is a win-lose scenario. It's kind of like, we all have to collaborate. Even though that Microsoft and Google are on this call, our two companies collaborate every single day, realizing actually, if we can create a larger pie, the actual outcome for all parties is better as well. And this goes back to the telcos. Remember when SMSs only worked on your own network? I mean, that was a very logical decision. As realized, actually, you know what, if they worked across networks, everyone benefits. And this is going to be the same in the SME space, is it's going to be a collaborative effort so that the potential here for all parties can be unlocked.
Can I ask, what do you think collectively as a group of panelists are the major risks to wider proliferation? I mean, there are infrastructure gaps, right? Clearly, there are utilitarian gaps around what should be free and what's not, and who ultimately pays building out that base infrastructure, whether that's on identity, whether that's on access, whether that's on payments integration. But do you feel that the real hurdles to wider proliferation and adoption are privacy or cybersecurity or regulation, or even the fact that we have a huge wave of operators in the DeFi and kind of crypto world who are building parallel ecosystems, but that are now integrating very quickly with the real world, and at a scale where incumbents and fintechs should be worried, in my opinion. But yet, it's not talked about to the extent that it should be. Where do you see the big risks? Maybe start off with you, Cindy, like based on everything you've seen across the broad spectrum across Google Ads and your kind of ecosystem partners. Do you see privacy being an issue, cyber, access to infrastructure, DeFi?
So I think within the Google Ads space, I think privacy is probably still the biggest, not biggest concern, but I think the biggest sensitivity around progress. And I think it really is about how do we ensure that players within the space are still able to communicate and reach their customers as efficiently as possible, because obviously not everybody SMEs don't have an unlimited budget to share the key value propositions that they have with the entire of Malaysia, right? That would be extremely costly and also not very relevant for a large number of people they speak to. But we also want to make sure that they're not using information that the customer is actually not wanting to share with, these advertisers in terms of being able to target them. So it's very important that we essentially minimize the amount of individual data that's being used. So in terms of whether that's, a blocker, I think not. I think it's a space of innovation. There are no clear solutions right now, but there's a lot of time and resources and efforts that's being put into it to ensure that we move towards that privacy-safe internet. So while it's not necessarily an immediate blocker, I think it's something that we continue to share a lot of information about in terms of what we're trying to do, so that consumers are also aware in terms of what our progress is and what the implications of using the internet is, and how their data is being managed as they use Google search and YouTube to look for information and so on.
Other risks that the rest of the panelists see?
I think the risk in itself, taking a slightly different perspective, but still on risk, I think the risk in itself is to the financial sector in itself. I think the telcos learned it the hard way for the last 20 years, in which building their own, like Scott was saying, charging for necessary tools to enable business, to enable communication and so on, needs to be put aside for a moment. Like I said, easier said than done, but take into consideration that the pie is big enough. It will, unless, again, not trying to prophesize, but I don't think it's a winner-take-all scenario. It won't be a winner-take-all scenario. It's within the whole environment, as opposed to the ecosystem, the whole environment, there are opportunities which are big enough for corporations, startups to play in. And the risk is that if there is the lack of collaboration, especially in the sharing of data, for example, what will transpire is that people will be building their own, and that will eventually lead to dilution of value within the sector that we're operating in.
Yeah,
Scott?
Like I said, I think all the risks we've tabled and I agree with, but I fear that actually the larger risk in terms of the potential here is the mindset of which incumbents choose to take into this. Because, and I'll be totally honest, most financial regulation today is driven by incumbents. And I don't think that's a good thing. Because if you have a look at how almost every industry has been disrupted in the last 10 years, it's because a disruptor decided, actually, I found an automated workaround for this that's better for the customer. And so we need that expertise coming into the regulatory dialogue, coming into the mindset of the incumbent ecosystems and how it gets structured, so that we can unlock the potential. Because if the incumbent mindset is to continue to basically think fixed mindset and defend, a lot of this progress won't happen. The identity stuff won't be solved. The inclusion components won't be solved. Everything even privacy will not become a challenge because we haven't reached the potential of the ecosystem yet. And so we have to address as around how do we find more collaborative growth mindset, I suppose, forums in which the overall ecosystem, and I'm going to deliberately say ecosystems because I feel like this is no longer a single regulatory component. Like the telco regulator is going to be speaking to the financial services regulator, to the consumer goods regulator. Like they're all going to have to collaborate to make this work. And so I think, but we need to think about how do we bring some fresh thinking with a positive outlook as opposed to a defensive outlook. And that's, to me, is the absolutely most critical part of this actually succeeding. And this has been the most critical part to financial inclusion for the last 15, 20 years.
Fantastic. Thank you all. I think we're pretty much running out of time. We've got a few more seconds left. I'd like to thank all the panelists for their contributions and insights today. It's been very insightful for me as well. For the rest joining the session, remember there is another session following this one on how to create value from data, which starts at 10:30. So hopefully all the participants can stay tuned for that. But thank you for joining the session, and look forward to hearing questions directly at some point in the future. Take care. Thanks, everyone.
Thank you.
Thanks.